All right, guys, what is going on? Welcome to the stream. Welcome to Wall Street Wednesday. Even though that's not the title, you know, still Wall Street Wednesday though. You know what I'm saying? So we'll see. We'll see how many people get on today. Yesterday we had all-time highs of 100, and then we had like 77 likes to, at least by the time I checked in the afternoon or the evening time. I think it was the evening, which is pretty cool, you know, which is pretty cool. So drop a like if you guys are ready for some more heat. If you're ready for some more heat, drop a like on the stream, let me know. 40 people only had like 5 likes. There y'all go. There y'all go, starting with that nonsense early on today. We got to do better, chat. We got to do better. We got to do better. What's good, Jordan D, Quinn, Manos. Another 50K combine pass thanks to the models. Very nice, Jordan. Post that in the Discord. You don't have to tag me on social media, but I do appreciate when you guys do that. You know, marketing, right? So that's cool. But yeah, so congrats, Jordan D, for another 50K. That's always very, very nice to hear. What's good, Marshall, Willow, Toby, Edgar, Mason? Got the silver sniper today, finally. Finally. Very nice. That means you've been here 6 months in total. So very good. What's good, Felix, Juan, Flacco, Amin, Jose, Robert? What's going on? What's good, Shay, Millie, Evan? I think that's how you say that. Convicted Capitalist, Crispy J. What did I miss? You missed everything, dude. Fuck. We're at the end, man. We're at the end now, bucko. I'm just kidding. We just started. What up, Buttercup? Hey. I've always wanted to say that. I finally got a chance to do that. Look at that. It's good. President Ray, Hell Spawn. What up? What up? All right, so don't let me tell you this, okay? First, let me turn my music back on because I cannot. I have to hear shit. Don't feel bad if you didn't catch anything today. Okay? I've been doing this a very long time. A very long time. Some of you are still new, and that's okay. I only introduced, God, yesterday I introduced new shit to a lot of you, like the MOC, market on close, and entry, stop loss placement, the order of models. That's going to be a really big point I want to make today. The order of models. I went over that yesterday, but I laid out like an hour and a half worth of content yesterday. I edited that video. It took me like 2 hours to do that, by the way. And I uploaded that edit as a video on this YouTube channel, which even the edited version was an hour and 6 minutes. So, but it's an hour and 6 minutes of straight just gas. So that's why there's so many timestamps as well, because I wanted to timestamp every example, every topic I talked about, all the transitions and stuff. So there was a list, bro. If you go look at it, let me do that real quick for you. Not for you, but let me just look at that real quick. The excuse me, a masterclass on market maker models with the MMXM next to it. So if you go into the description, okay, that's what we talked about yesterday. Oh shit, forgot my thing is right here. Can you see that? This is all the stuff that we talked about yesterday. Notes, types. I walked you through what a market maker buy model is. We talked about distribution, turn, accumulation, premium and discount, when to expect entries, where to add to positions. We talked about stop loss placement ideas. I gave you 3 examples and included a breakaway imbalance. Briefly mentioned market on close. I taught you how to trust the low. Taught you what the discount of a discount is. Models in order. Okay, at the 35 or 34, 35 mark. And then I gave an example of a market maker sell model. And then I gave another example on gold, Australian dollar, ES. I gave an example of the next candle entry. I gave an example on Dow Jones, ES, and NQ. And then I ended it with notes. And then actually ended it with some trade management ideas. So, yes, you guys got an absolute just... Honestly, that's probably the best video I've ever done. Like in the history of the last 6 years I've been teaching. It's probably the greatest video I've ever done. Content wise, not like editing and stuff, because I'm not going to make like brain rot content, but content, like substance value wise, I can't think of a better video than that one. Caught the short-term highs and looking for shorts. Okay. So with yesterday's ideas in mind, we can go and now take a look at NQ. Now, this might look a little bit sloppy to you, and in a general sense, it does. But what is it looking like? What's it looking like? Do we have consolidation? Yes, we do. Do we have low resistant highs or equal highs here, low resistant highs here? That's something. What about down here? What is this? Equal lows. And then what's that? If these are equal lows and that's lower, what do you think that's going to be? We rally off of that, trading towards what? What are we trading towards here? These highs, right? So now what do we come down for? I wasn't looking for answers in the chat, but I'm glad you guys are participating. Okay. So there you have it. All right. We'll spend a couple minutes here. Pre-market consolidation because equities open is here. Actually, that I should add that. 829 and 830 is right there. Beautiful. All right. There's your equities open. Excuse me. So we drop down, equal lows, we rally up, we don't take the highs, and then we trade off of that. So what's that doing? Engineering liquidity. Robert, liquidity trumps everything. What's good, Alexi? You would have tried selling that imbalance? Well, Rob, you would have got fucked up. To put it frankly, you would have got fucking wrecked. And I'll continue on with some ideas. I told you on Sunday, I guess we'll just cut right to it then, fuck it, since we're here. Okay. If you go into the Discord on Sunday evening, I talked about Dow. I posted that first. And I also said if ES follows suit, 5-830 would be an upside objective. Okay? I gave that to you on Sunday. Sunday. In the afternoon. Evening time. Okay? So what does that mean? That means on Wednesday, are we at 5830? No, we're below that. So if ES is below 5830, what do you think we're looking for? Bullish price action. So you wouldn't be looking for shorts, Robert. You wouldn't be looking for shorts. I mean, you might, but I've always said this. If you're going to fade me, you better pray. You better pray hard. Because, again, I gave you 5830 as upside for ES. We traded lower Monday and Tuesday. What does that tell you? We go lower before going higher, right? Oh, yeah. Great. So then what do we have here? Right in here, okay, here's that special sauce you guys have been asking about. Actually, nobody's been asking me anything, but other than like questions, but like, here's what I was referring to yesterday. Remember this? I promise you this is all in the video. It's all there. Right? How to trust the low. What did I tell you? How do I trust the low? I told you if you get a lower low on ES or NQ, whatever, if its correlation is doing something entirely different, like going higher, that's manipulation. That's what I called out on gold earlier. I gave you the low of the day, or the current low of the day. I don't know if it's lower now, but I gave you the low of the day on gold to the very minute. To the fucking minute at 8:31. Right? We'll get to that in a minute too. So that's how you know this is manipulation. It's trading below equal lows, and its peer is trading higher. What does that tell you? If you, oh, my camera I think is right here. Look right here. Okay? Look at my blue circle on my mouse, okay? Now look right here on your screen. You see this right here? Where my finger is pointing to? That's 5,800 right here. That means ES right here is at 5,800 even. Maybe like 5,801, something like that. Right. So what does that tell you? It tells you that the S&P is under accumulation. Tells you that Nasdaq is under manipulation. All right then. Well, you know, that's fucking great. What about that image though? What about that image? What about that image, John? I need that image. Don't worry. I'll take care of you. Even though I lost like 10 viewers, but it's fine. All right. Some people come and want to check it out and leave. That's fine. But they're missing out on all the good shit. Remember this from yesterday? Oh yeah. The equal highs or the low resistant highs. We get some distribution, then we get manipulation. Oh yeah, I remember yesterday you were saying that the models are in order. And it all starts, or the low begins with manipulation. Right. So what is after manipulation? The low risk buy. And I told you that 50% and below that, roughly to 25%, right? From 50% to about 25%, this area here is where you'll find what? What did I tell you yesterday? That is where you're going to find either areas of redistribution turn accumulation, your low risk buy, or your mitigation, right? Is it all clicking? It was only 24 hours ago, right? 23 maybe, 23 and a half hours ago. Right. After manipulation is your low risk buy. In that first leg of accumulation, right? What are you going to find? Low risk buy, imbalances, mitigation model, things that alike, right? No shit. This was yesterday. This was today. What do you find? 25% level. Sweeps that low. Trades off of it. What's right here? Low, high, lower low. We trade through that. So what's right there? What's right there? And what's inside of that? An imbalance inside the mitigation. Baby, that's your mitigation model. That's your mitigation model at your first leg of accumulation. Ooh. Man, John, look at that shit. Wicking the 1 minute time frame. The same time frame those goobers on Twitter tell you to stay away from, right? Yeah. That's why they don't get entries like me. See those two down candles? Price rallies off of that. Uh-oh. Above 75%. Wait a minute. Wait a minute. Something about that 75%. What was he saying yesterday? Let me check my notebook. Right? This is blank, by the way. This is blank. I was just fucking around. Oh, yeah. He said not to long above 75%, but we could long at the latest below 75%. Okay. What's right there? Boom. Down candles. Runs for those highs. And then I didn't hold on anything for the rest of the day. But if you did, that was right there in here. Look how close to the low of the day you're getting on an expansion day. Oh, man. Well, John, fuck, dude. How was I supposed to know it was going to rally all the way up here? How did I know that? Well, I didn't know that. I don't think you did either. But it's safe to assume that if ES is going to run up for 58.30, like I gave you 3 days ago, I told you I'm a time traveler. I time traveled to Thursday morning so I could gather some information. Then I hopped back in my time machine and came back on, to Sunday and then mentioned it in the Discord for you. But I threw Dow Jones in there to be wrong, so it's not to be suspicious. Right? 58.30. Okay. So let's go investigate ES for a minute too. because now you're going to see what you missed. And again, it's not to make you feel bad. Oh, I missed it. Look, bro, you just learned this shit yesterday. Okay. I've known English all my life. I still misspell words. Okay. So it's nobody's perfect. All right. You got to spend time with it. It's just like philosophy. You got to spend time with it. It's got to take root. You got to practice it. You got to breathe it. You understand? So don't be upset that you missed this. Just be thankful that someone like me is out here willing to teach you, because a lot of people don't teach things correctly. And I saw some more dumb shit on Twitter today. I screenshotted more of it. Some dude was like, never take a big win. I'm like, are you fucking joking? This dude has more followers than me. What the fuck? That, I want to say, what time was that? 8:45. 8:45. Okay. So, let me just make sure I got this correct. It was right here. It was right there. Okay. So when, sorry, let me just do this one more time. Oh, there was two. That's right. Okay. So 745 trades lower, and then it trades lower again on NQ. ES, that 746 low, we have a higher low at 837 or 836, and then we have a higher low here. So there's a divergence between these two lows. That's one of them. And then the other two lows is this low and this low. Okay. So this low, where does it trade into? What does it go into? At 844, what's it trading into? Can you see it? And there's more than one right answer. There's more than one right answer. Easiest one probably for most of you is going to be the imbalance. You're not wrong. Did you catch the inversion? Did you see that? Imbalance respected to go lower, but this is accumulation. That gets traded through. So that becomes an inversion. Oh yeah, but that's a lower low. So what does that make that? Oh, that makes a mitigation, doesn't it? Oh shit, John. You're telling me that you have a mitigation model within an imbalance, within an inversion, after accumulation on the way to 5830? Woo! You guys are learning some shit this week. You guys are learning some shit this week. There was somebody on Twitter that was very respectful, and it was a gentleman, and he said something like, hell, I don't remember. Let me look at it. He said, I'm so amazed at how you usually see the chart, such precision. Right? I love the comment. It was great. Why do you think that is, though? Why do you think that is? It's not me. I just been practicing. I've been knowing this shit for a long time. Been studying this for a long time. That's why I tell you to study it too. Right? So that right there, where's that at? 5,800. But remember, chat, I gave you 5,830. Oh man, you know, risk reward, 1 to 2 is all you need. 1 to 3 is like really good. Okay, well, how about a 1 to 4, or maybe a little bit above that at a 1 to 5? And that's at the lowest RR. Like that's the widest stop. Your stop could have went to the low end of the mitigation body. That's a 1 to 7. Oh, never take a big win. Never take a big win. This dude really tweeted that. You guys don't even understand. This guy really tweeted that. I never take a big win. What are you teaching for? What are you teaching for then? That's insane to me. Like, oh my God, dude. Like, that is the most bonkers shit. I'm disgusted, bro. Fucking makes no sense. This is what that looks like now, because I want to make this a point too. Okay. And I have to do a follow-up video now because I recorded it in here. And I said 58.30 on a daily time frame should be upside expansion. I also said upside for Dow, which we have not gotten totally, because I did mention 43,005 and we're not there yet. So I can't say anything about that. But, you know, just full disclosure, that's what I said, and that's a follow-up. So I haven't exactly been right on the Dow. But for ES, right, study how did we get there? Now, this is why when people ask me about weekly profiles and all that kind of shit, it's not something I like to do, okay? And it's not my best. It's not my best work, okay? It's just not. Okay? I don't know how to explain it to you. Like, you guys think I know everything, and bro, I know a lot. I don't know everything. Okay? Two, three. There we go. All right. So, actually, that's pretty delineated enough. Sunday, Monday, we trade lower. Tuesday, right? Tuesday's daily candle trades higher, right? So, what do you notice about today? What do you notice about today? And I don't remember which one has that. What do you think that is? Midnight, New York. You see that? Midnight, New York. Then we drop down during London. Okay? We're dropping down in a day where we can possibly anticipate expansion. So what does that mean? Let's come all the way back. Remember this? You remember this one? Do you? Oh yeah, John, you talked about this plenty of times earlier this year. Right. Open. Low, that's where we want to ideally long. Or if we're above the open, at least a little bit above the open, we can hold it. Or like say this was London and then we have New York. Okay, well, New York's going to trade lower, right? Equities are going to trade lower, right? So that can be some late entries. And then we want to hold for what? The high of the day. $58.30. So now do you see it? Let me come back. Let's go back to the 1 minute time frame. If you take, it's really hard to fit on one chart, or like one screen rather. But I want you to see this, because this is how you're gonna take trades like the ones that I take, that are just like, how does he do it? It's like this, bro. It's not a secret that I'm keeping from you. But you refuse to pay attention and you refuse to study, and that's why you don't know it. Okay? But that's probably as close as I'm going to be able to get in terms of visual, visuals. But drop a 1 if you guys are understanding what I'm telling you. Drop a 1 if you guys are understanding. We not only have, oops, I'll put that back up. What did I say earlier? Equities open, right? So look at that. Okay. Let me take off all this stuff in here because it's a little bit distracting. But look at this. Perfect. Perfection. Equities open, drops down. Open, drops down. We could be longing something like that. Right? And then that 1 minute, I think it was a 1 minute, right in here, I was telling you about all those concepts, right? Just below the open of equities. And then we want to hold. And then we want to TP near the high of the day. That's up here. So, how do you catch big moves? How do you catch expansions? Well, pay attention to what John said. No, you don't pay attention to what I tell you. Because I don't tell you every Sunday. This was the first Sunday that I gave you an objective, you know, prior to even Monday morning session. It was just Sundays open, boom. All right, here's a level to watch for the week. Here's one on Dow, here's one on ES. That's it. I didn't give you a downside objective because I wasn't looking for downside. I gave you an upside objective. Okay? But these are the kinds of things you need to look at. Okay? You need to look at and you need to study. All right? Let's go back to the daily for a second. All right? And look how we did that. Sunday afternoon. Monday, lower. Tuesday, okay? What's special about Tuesday? Tuesday took out Monday's low. Expansion. And then same thing. See that image here? It's the same shit. That's not it. It moved over to the other one. Okay? That right there is the same thing. Open, low, long, expand higher above an old high, TP. So you see how that works? So if you're anticipating a daily expansion, all right, here's the big kicker. You ready? Here's the big kicker. If you're looking for expansion on the daily time frame, all right, you can mark up your 1 hours, sure, and that's why I had this here. Because this was a mitigation on the 1 hour. Hit that yesterday afternoon in the PM session, and then hit that again in London. Rallied off of it, and then pre-market and everything I gave you already. So if you're looking for expansion on the daily, you can look for smaller time frame market maker models. Because now you're getting in sync on the small time frame with the higher time frame. Did you guys catch that? Let's go to NQ. Okay. I didn't say anything about NQ this week because I did not like what the daily had presented. Meaning, I didn't want to call out this level up here, 20,500 and whatever that is. 538. Yeah, 20,538. I wasn't willing to call that level. I just felt like it was a lot to reach for. Okay. But look at today's candle. Actually, you know what? I didn't even notice this until just now. I didn't even notice that until just now. Do you see it? What's some of the concepts we've been talking about? We don't have an imbalance that I'm looking at. Let me find it. This one I didn't put in the folder. Remember that? You remember that? So this is a bearish example, obviously. An up candle takes something on the higher time frame and it trades down and through that, right? So that's a shift in price delivery. So what's the inverse of that? Monday's candle was lower, right? Same thing like ES Tuesday took out Monday's low, right? See that? And then what does that become here? Boom. That's your shift in price delivery on Tuesday's close. Monday was lower. Tuesday took out Monday's low and then closed above Monday's high and body, open and high. So then Wednesday, buying below the open in bullish conditions, right? So let's go take a look at that. This is what that looks like on a 1 minute. London, actually a little bit prior to London, but London brought us into that daily Monday's open. We rallied off of that. Then, okay, now we can go in here and now you're seeing why this stuff in here that I taught you yesterday was so responsive. Did you guys catch all that so far today? We have a hear ye. We have a market maker buy model in a scenario where the other indices are likely to expand and Nasdaq is coming off of a daily down candle. You see that? So Nasdaq was the one that was manipulating below old lows. Okay? And then look at price. Do you notice how many wicks are here? Lower, 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 lower. But it's being rejected. It's saying, I'm going to go lower. Nope. Lower. Nope. Lower. Nope. Lower. Nope. That, I wouldn't take that by itself. But that, there's a huge reluctance to continue lower. There's such a reluctance to trade lower. And look at price, how once this was done, once we got manipulation, once we took this short-term low at our 25% level, and we moved beyond 50% again, look how easy it was to long. Wick in here, wick in here. It does come back a second time. But then look at the rest of the day. Down candle, trades through that, comes back into it. Look how easy that is. Doesn't go halfway within the down candle. That's a bullish signature. Anytime price cannot trade through halfway of a concept, that's a bullish signature. So what do we get for the rest of the day? Well, minus like pullbacks, obviously. But generally speaking, what do we get for the rest of the day? Expansion. So let's pause for a second because I threw a lot at you today again, and that's okay. I'd rather give you too much than not enough every time. Okay? So what have we discussed today? And I won't do this every Sunday for you, mainly because I don't like doing it. I'm me, okay? But on Sunday I gave you 58.30 for ES. We went over how we got there. How did we get there? Well, we saw that Monday was lower, which you can expect. If you expect higher pricing, we go lower first. You've always known that. How many times have I been saying that? For years. Monday was lower. Tuesday, low of the week. Tuesday took out Monday's low. I don't remember where ES closed, but NQ on Tuesday closed above Monday's open and high, shift in price delivery. Wednesday should see expansion. If we can anticipate expansion the next day, because you can do an analysis in the evening time, that's fine. for tomorrow. You can say, oh, tomorrow I'm bullish or tomorrow I'm bearish, if you can come to that conclusion. You say, okay, well, ES has upside, Dow has upside, and Nasdaq, well, if the other two are going to trade higher, it might as well trade higher too. Okay, well, we'll see. We'll see. So then, again, if you're anticipating expansion, we're looking for what? Longs below the open. We're looking for inversions. You see that? We traded through that here, and then there's your inversion model. You catch that? We traded through it here and back into it. So you have a lot of stuff here. Y slime model, low risk buy. Y slime model here, mitigation model, inversion model, down candles model, discount of a discount. Discount end of the premium. That's what I chose to go with. Okay. So again, it's a lot of stuff, but I'm giving you all the details. Like literally, I'm not holding back shit. It's all there for you. Higher time frame bias, lower time frame entries, lower time frame market maker models. And all of these models you already know. The inversion model, you know it. The mitigation model, you know it. Second leg, right? Waiting for a crossing of 50%. Well, that's part of it because we did have a deep pullback here, but second leg model's there too. Why do you think that always does that? Why do you think there's so many models? Because they're all part of the market maker buy model. That's why. It's all part of the roadmap, dude. You can't have a mitigation model without manipulation. You can't have a low risk buy until a divergence. You can't have an inversion until that gets traded through. You can't have a down candle model until that gets traded through. You can't have a bias until you have equal highs. Why do you think the rules are the rules? Think back to a year and a half ago. Top 10 smart money trading rules. I never long when there is equal lows, and I never short when there's equal highs. Right. So now it all makes sense. The rules make sense. The beginner series makes sense. The mitigation model makes sense. The inversion model makes sense. All the models, they all make sense. Because we're trading from what to what? How many times have I said this, chat? The market trades from liquidity to liquidity. That's the market maker models. Did your fucking head explode yet? You've been learning these things this entire time. This entire time you've been learning. That's why I have all those little sayings. I only long below the open or close to it. I want to long after manipulation. I want to target equal highs or equal lows. Now you understand all of it. Every rule, every model, you understand. Discount premium, you understand. Okay? So today, between today and yesterday, you probably have had more breakthroughs in the last 48 hours or the last between yesterday's stream and today's only 24 hours, but between yesterday and today, you probably have had more breakthroughs than any other time period. And yes, all the live streams are recorded. Most of them, or not most of them, but a few of them I save for members only videos. Like yesterday should have been a members only video, but you know, I've been blessed with knowledge and blessed with experience. So I'm not going to hide everything, you know. I'm going to share a lot of stuff. And yeah, Jordan, I appreciate that. So anyway, oh, we have not gone over gold. Sorry about that. We have not gone over gold. So, I partialed and then I got out on the rest, which is cool, I guess. But 26, 23.4. I was swapping between micro and gold, and that's why I think I got it wrong in the Discord between the two levels, like 0.6 or 0.4. But either way, it still stands. When I told you at 8:30 or 9:31 that this was manipulation, right? Did I do that? Did I do that? You bet your fucking ass I did. 2623.6 has clean lows, and that was earlier. And I'm replying to myself at 9:31. Boom. 2623.4 is done. I should have said 0.6, but again, I was swapping between micro and regular gold futures. And then I said, I smell manipulation. That's right here. Do you understand that? That's right there. That's why I said earlier, that is our current low of the day. That might not be it, because we're kind of hanging around there. But nonetheless, you could see part of a model here, market maker model here, right? Because there's some equal highs up here. There's also this here, right? So you have, I'm not going to mark up everything, but you have equal highs, consolidation. You could call that distribution. This in here could be a level of distribution. And then we're trading below these lows and that daily low. Go look at the screenshot I gave you earlier. I guess it might have been on micros. That was an inversion on the micro side. Right here. So there's your inversion model. And then here's your mitigation model right there. Can't have a mitigation without manipulation. Can't have an inversion without manipulation. So you're always going to have manipulation as the low. That always is going to be the case. That will never not be the case. Okay? Manipulation, inversion, low risk buy. The low risk buy always comes after manipulation. And then mitigation. You have an imbalance right there. You see that gap too? See that gap right there? Boom. Hits that. Down candles as well. Rallies up. What the fuck? Did that flash for you guys? That was weird. So, trading on the way to liquidity. And I took a partial just before this right here. This right here. Okay, so we ran into that imbalance right there. Then we did nothing for a while. And to me, it was building up liquidity here. It was kind of having like this trend line right here. And I was like, yeah, it might come back. And it did more than that. So it gave all of that back. But nonetheless, there was still opportunity. Did that inversion model give you a 1 to 2? Oh, you bet your ass it did. Did that mitigation model give you a chance to partial at a premium? You bet your ass it did. If that's your lower set of equal highs, and that's your low, where's that mitigation model at? Think back to yesterday, chat. Think. Where is it? Right near that 25% level. Where's that inversion in the discount of the discount? That imbalance up here, where is that? That's in a premium. Buy low, sell high. How difficult is that? There's specific parameters. There's specific criteria. There's a specific order to things. It's all there. Now, what do you do with this information? Because you might think, well, hold on, John. It was supposed to run to equal highs. Why didn't it do that? Well, first of all, there's FOMC. Okay. I told you that earlier. I told you that, I don't know, multiple times this week when we pulled up the Forex Factory calendar. I said, we have no news on Monday and Tuesday, but we have FOMC on, or excuse me, meeting minutes, FOMC meeting minutes on Wednesday. So you're trading at 9:30, maybe 10 o'clock, knowing that meeting minutes is at 1. So could it run up here? Sure. Could it come up here, consolidate, and then run for meeting minutes? It could. Or could it did like it did today and just shit the bed? It can do that too. But that's why there's rules. What rules are that? At the risk of repeating myself even more, I told you yesterday. When the market gives you a low risk buy, and then you have your first accumulation, and then price runs into a premium, right? Your stop goes from the manipulation low to the low risk buy, or to the mitigation to break even. Partialing at a, well, we have a bunch of new highs in here, but partialing at a premium concept, an imbalance in a premium. So that should be a partial, or this small imbalance right here could be a partial. That right there. See that? Right there. That could be a partial too. And then you break even on the rest. So a day like that, you might not understand. Oh man, this sucks. No, it doesn't suck. It doesn't suck. Partialing pays. That's what's going to help you get funded. That's what's going to help you grow an account. All right. And I mean, I'll give meeting minutes a few minutes just to see if there's an initial reaction, but I'm not going to stay here for forever. But what I will tell you is this was the manipulation I was referring to, where you have yesterday's low here on gold that was taken, and silver did not. Silver had a higher low here. So and then same thing. I mean, it had a retracement to go higher, just like gold did, but you know, they didn't gold didn't meet the expectations that I had. So, and that's okay. And that'll happen too. But if you're taking partials, you're going in account. If you're reducing risk and you break even, then that's better than a loss. You're still getting in sync with, you know, price action with order flow. It just may not always hit your target, like this, for example. So, you know, I won't always be perfect, and I've always told you that. So, can't always expect home runs, okay? So, anyway, as far as meeting minutes goes, let's see what we got. We got a little bit of manipulation, maybe. We saw a little bit of volatility here before heading into meeting minutes here today. Yeah, so it's hard to say. I don't want to make any predictions here, but I'm going to stick to my guns. I'm not going to say we're going to run up to 43,000, but that's still a objective that I have because of that manipulation here. It's just that we went down there again on Monday. So we, you know, made a lower low on Monday. So Dow to me is the laggard in like for this week. So we might not end up getting that today, but I don't know. Okay, I simply don't know. If I was still long on ES or Nasdaq from this morning, if I had long Dow for whatever reason, I would probably hold one just in case we launch up there. Like if I say I longed 4, I would get out 3 at these highs here. See that? I would have gotten out 3 like a couple hours ago, and I would just hold 1 for end of day. And that 1 would either come out to break even or run up here or just fuck around. I don't know. Oh, nice 2020. That's always nice. You missed a lot of stuff. You missed a lot of stuff. I'm pretty much done with presenting today. So we went over more market maker model examples, and I told you how to get in sync with higher time frame order flow. You know, how to find good setups, man. It's what I utilized today was no different from the things I gave you yesterday in that video. Gold didn't run the Western model low. Yeah, I mean, I don't know what gold's gonna do either. So what I do know is we're gonna find out. So we might see volatility, we might not. Again, I just don't have an expectation. Either way it goes. Not for gold, not for indices. I don't have any expectation. So it's going to start now. And I guess, you know, it'll last between now and the next hour or hour and maybe 2. So well, looks like we haven't done a whole lot. Yeah, gold today is interesting though, I'll tell you that. It left behind another set of highs here, but we have lows here as well. So, ugh. I wouldn't touch gold for the rest of today. On dollar, no, I don't think I have anything for dollar either. No, I don't even know what those markups are. Unless that's from yesterday. The imbalance here from the 19th. I think I said that on Thursday of last week. Somebody asked about dollar or the euro, and I said dollar was bullish. And we ended up trading through that imbalance here on Friday's close. And then Monday was a very small range day. And then Tuesday took out Monday's low, and then Wednesday seeing expansion. So yeah, I have no reason to short this. So I guess continuation higher. So we'll see. But yeah. That's all that I got for you guys. So drop a 2 before you go. Drop a 2 in the chat if you guys really have learned something this week. If you've gained some confidence this week, or if you're at least excited about learning new stuff, I mean, and how to apply it. I mean, because like, bro, I'm gonna be real frank with you for a second. I'm gonna be real fucking frank with you for a second, but you do not see very many people doing this. Okay, I'm longing the inversion model here, and then I'm longing the mitigation model here. And I told you what, if you stack positions down here, you can add on later, right? I taught you that. And then I came out and I'm doing it too. And a lot of people don't understand how to buy on something like this. I probably took a little bit of drawdown and maybe a little bit of drawdown on here, but look how quickly that goes in my favor. Look what you're learning. Think about all these people on Twitter, but they're not showing you this though. They're not showing you the things that I'm showing you. Do you understand? And to me, that's exciting, bro. To be on like the opposite end, like if it was you that was getting these fucking nasty entries, saying shit on Sunday and having it hit on Wednesday, I'd be like, man, how the fuck did he know that? I want to know. And that's why I teach the way that I do, because I know that's how some of you think. Oh man, that's a good entry. How did he do that? Dude, I explain it all the time. All the time. I've given you everything. Models, timing, logic, directional bias, trade management, pyramiding, all of it. So I would be excited, because the way, I'll say this and then I'll close it. What I showed you yesterday and today, I taught that to you in like 2 days, right? It's a lot of information. It's condensed down into a couple of hours, right? But you have to realize the way that I learned this was not the same way that you're learning it. Okay? The people that are out there teaching this information, some of them don't even get it right. Some of them do give out some sauce, but they're not giving you all the details like I am. You know? And I have all the respect in the world for traders, okay? Especially like Trade House, okay? Those are my boys. And I know that Wyckoff is popular among the MLM industry. I know Wyckoff is popular among traders, and that's cool. But in all seriousness, like no bullshit, you look at the Wyckoff traders, look at their entries, and then look at my entries. You understand? It's not the same thing. As much as it looks like it, it's not the same thing. Go look at any of the, Wyckoff. Okay, go look at their entries and then look at mine. And I promise you it's not the same. It's not the same. It's not the same shit. Okay? They're either taking heavy drawdown or, it's not the same. Okay? So trust the things that I'm giving you, because this is what I trust. You understand? So with that, I will close it. Y'all be good. Be blessed. If you want more practice, just go back and watch the stream. Or not the stream. I saved it as a member only, but I, again, put out the video yesterday. It's on my channel. Go watch the video again. You can get a whole nother hour of tutorials walking through market maker models. And then you can go into today's price hack, because I know some of you asked about currencies earlier. I didn't mean to skip your question. It's all the same shit over there too. Like with what I did on New Zealand. Okay. Sorry, I said I was going to close it. I lied to you. I'm not going to close it. I'm not fucking leaving. New Zealand. Okay, this is what I did on the future side the other day, and it was just a practice. But Tuesday there was I think they had cash rate or some shit. Yep. They had cash rate at 8 p.m. That was here. We saw whipsaw, and then we saw it trade lower, up candle. We traded through that, and then you saw me. I shorted that right there. Again, this was a practice account. But look at that. Your fucking Wyckoff traders are not doing that. They're not doing this, bro. They're not. You understand? They're not fucking doing it. As soon as that candle closed and this one opened, I'm short. I took a little bit of heat. Okay. Fucking what? 2 pips? 3 pips? Oh, big fucking deal. Immediately my direction. And since I was in 5, I was getting out 1 a little bit lower every couple of pips or so. And then I got out 2 at that last. Right there. Okay? So I'm shorting a bearish market, right? Look at that. This is a 1 minute time frame, chat. But why would I do something like that? Because, as I've already explained in the Discord at least, we have 1 hour lows here, low resistant lows, and then we have Wednesday, September low just below that. So this was engineered liquidity. This is like longer term liquidity, and news was the excuse to drag us lower. So if I'm going to trade something like that, that's what that looks like. See that? That's Wednesday, September 11th low. Those 1 hour lows are right here, which is also a previous day's low. So I want to short bearish markets. And that's how you do that. And Wyckoff will not do that for you. Okay? So all respect, you know, to other educators and whatnot. But just compare and contrast. You look at other people's content. You look at my entries and you go, all right. Let's see what's really going on. But I'll leave it at that, okay? Now we can dip before I continue, rambling. If you want more, just go watch the video. It's an hour long. There's so many parts to it. It's all timestamped for your convenience. The order of models, that sounds familiar. What is that? Go back. There's a specific time that I go over that. And all of the other stuff, okay? So be good. Be blessed. I will see you on Friday, October 11th for the next live stream. I'll put out the market review tomorrow in the evening.